I'm going to show you one strategy step by step that you can implement into your portfolio no matter what size account you have, and you're going to start generating returns from the very first month. So what you want to do is open up a list of futures that you can trade that have options available to trade on them. So if your broker doesn't natively display this list, copy these ticker symbols, make your own, have IVR, which is IV rank, on your watch list. Order everything from high to low, and you only want to look at things to trade with an IV rank of at least 30. So that's pretty much everything on this list except for the Aussie dollar. So once you've picked an underlying to trade, we're just going to have a look at natural gas. I love trading natural gas. There have been some really nice premiums lately on natural gas. So we're going to open it up, the trade tab, so we can see a list of option expiration dates. And you want to pick an expiration date that's further out than what we normally trade. You want to go to around somewhere between 90 and 120 days out. I personally lean towards more on the 120 day side of things. So what we'll do is we will go with the 133 day expiration. And what you want to do at this point, when you can see the options chain, is just find the 5 delta call and the 5 delta put contracts, and you basically want to just sell them. So let's find the 5 delta call contract, which is here, 7.25, and now you want to find the 5 delta put contract, which is there. Okay, and now in this instance we are basically selling a very wide strangle here that's far out, and we're basically just going to end up with an extremely high probability of success. And because we're doing this on futures, which uses span margin, we are still able to get a good return on our capital, even though our strikes or our contracts that we're going to be selling are so far out of the money. Okay, so if we have a look at the numbers here, our POP, which is probability of profit, is 87%. So we've got an 87% chance of making money if we hold this position for the entire duration, which we are not going to do. Okay, and what we're going to do is we're going to actually get out of this position no later than 50% of max profit. Okay, so if you were to take profit at 50%, your win rate or your POP would get bumped up well into the 90% range. Okay, so you're going to have a 90+% chance of success if you're managing and closing at 50% of max profit. Okay, it's also not even a bad idea to even potentially close at 25% of max profit if you can get there fairly quickly. So anywhere between 25 and 50% is where we are going to look to take profit or close out this trade, and we've got an over 90%, well over 90% chance of that happening. Okay, so we would collect $650 up front, and our broker is going to require just over $1,000 in buying power to open this trade. Now I am going to show you what you can do if your account can't handle this, but in this instance we're going to collect $650 up front. So when we say we're going to take profit at 50% or 25%, that is 50% or 25% of this number here, the max profit number, which is 650. So it'd be 50% of this or 25% of this, or anywhere within that range. And this is what you need in your account, or this is what your broker is going to require you to use as collateral, basically, and buying power to be able to open this position. Okay, you need to keep your buying power in check. Use our free position sizing template. The link is in the description. You enter in the size of your portfolio, you enter in whatever the current VIX level is. It's going to tell you exactly how you need to structure your portfolio on a portfolio level, and it's also going to tell you how much buying power you should be allocating on a position level as well. So this position here is an example of an undefined risk trade. So if we go to the undefined risk position section, we can allocate up to $1,750 in this example portfolio per trade, and as you can see, we are using less than that in our buying power requirement. So this trade would be perfectly fine to put on in this portfolio. Okay, now I am going to show you what to do if you have a smaller account that can't handle this much buying power. But before we do, just so that you guys are aware, we do have EDS Premium as well. So the template is free, but this is EDS Premium is paid. But what you'll get inside EDS Premium is you'll get access to this exact portfolio, which we do trade in. You're going to be able to see all of the positions that we place, all of the adjustments that we make, how we manage risk, etc. Everything is shown in real time. This is a position that we took off today. This is a very small portfolio, by the way, very, very small portfolio. So if you do have a smaller account, feel free to jump on the back of the trades that we put on here. So far this week, we've placed 2 trades. It's Tuesday so far, and we have won both trades. So we're on a 100% success rate so far this week. We're just doing some zero data expiration stuff in here, but you can get access to all of that in EDS Premium inside this exclusive portfolio access section. There's also a full course, so no prior knowledge is required. We'll teach you everything you need to know. It's a private community, so you can speak to myself directly with other like-minded individuals. There's a 100% money back guarantee as well. So after 6 months, once you've been through the course, follow some of our trades. If you haven't been profitable, then we will work with you for free until you are, or you can request a full refund. So it's completely risk-free, $9.99 a month to join. The price will be increasing, but once you're in, your price is locked in for life, so you are rewarded for getting in early. And the aim of EDS Premium is to teach you the skill. We don't want to keep you dependent on us. We want to give you the skill. Once you've learned it, no one can take it from you. It's a very powerful thing to learn, and we aim to get you to a point of where you are self-sufficient within 6 to 12 months. Okay, so with that being said, let's go back into the video and show you how you can still take advantage of this strategy if you have a smaller account. Let's say you can't allocate that much buying power. Well, what you can do is just pick a different underlying. Okay, so span margin takes into account lots of different things when calculating buying power. Typically, long story short, currencies do well for smaller accounts. Bonds, soybeans, etc., things like that. So if we were to, let's say, have a look at the euro futures, and we were to just set the trade up exactly in the same way as what we did for natural gas, we just go to the 5 delta here, we go to the 5 delta here. As you can see, in this instance, slightly less buying power is required. We do collect slightly less up front. Our pop is higher though, just due to the nature of the underlying, but we do have less buying power requirement. And you can literally just keep going down the list, because the buying power requirements do vary, they do change. Just keep going down the list until you find something that will fit well in your portfolio. There are underlyings that you can trade and have this strategy running, that only require, for example, this is a perfect instance here, $349. So you can use this strategy, trade the Canadian dollar, and right now at the time of recording, you'd only need $350 in buying power. So that's going to fit inside almost any portfolio. So this is basically what you can do. And it's very consistent. In terms of stop losses, I don't personally use stop losses. You can use a stop loss. A 300% stop loss works quite well. I personally don't. If, for example, I use a time-based stop loss. So if, for example, we open the trade with 120 days on the contract, when it gets to 60 days, I'll typically just close out in any amount of profit. If we're in a loss at that point, I'll look to maybe make some adjustments, roll some sides, etc. If it's a small loss or a break even, I might just close it, look for a better opportunity. But I personally don't use stop losses. If you really want to use one, a 300% stop loss is profitable and still works quite well. So with that being said, I'll see you guys inside EDS Premium.